Abundance Stock Advisors. Let's make money.
Hey, and welcome to Abundance Stock Advisors. Technically, every investor must look forward to investing in stocks. People who discourage you from investing do not understand anything about the stock markets, and they have no idea where and how to invest. In this video, our experts will help you understand why you cannot live without investing in stocks. To get notification on this video and many other life-changing future videos, do subscribe to our channel and press the bell icon. Stay tuned.
Welcome. Friends, all our videos under the ZOP series are super technical in nature. They are not for your entertainment, and they come with a guarantee of taking you towards profits. So please watch carefully till the end. Now coming to the topic, let's understand why you should invest in stocks. Share markets are designed to go up. Now, since the inception of stock markets in 1979, you pick any 7-year period, only twice have stock markets given negative returns. Once between 92 and 99, where the returns were 1.92 -%, and then between 96 and 2003, where the returns were -1.41%. Otherwise, from 1979 to till date, every 7-year period has made the investors happy and rich, as you can see in the green glowing box. Now, if you pick any 10-year period, you would see that just once have stock markets given negative returns. That is between 92 to 2002, where the returns were -2.09%. And if you pick a period of 15, 20, 25 or 30 years, you would know there has always been positive returns only. Meaning, if you had invested in 1979, then by March 1994, that is after a 15-year period, your returns would have been 27.40% annually. And had you invested in 1980, then by March 1995, that is after a period of 15 years, again your returns would have been 24.05% annually. This proves that stock markets are designed to go up. Only short-term traders make losses. Long-term investors always make money in the stock markets. 2. Higher returns in shorter periods of time. Can your 1 lakh become 40 lakhs in 1 year? Yes, possible. Only in stock markets. We had recommended Indiabulls Ventures in February 2017 at 20 rupees. By August 2018, it was trading at 800 rupees. Now, there are many more examples like these. So, this is very much possible. It's just that you need to have the right knowledge. You need to know what to buy, when to buy, and of course, when to sell. Such opportunities keep coming very often in the stock markets. By the way, had you invested 1 lakh rupees in MRF in March 2009, it would have become 53 lakhs by April 2018. That's like 53 times in 9 years. Yes, that's the power of investing in stock markets. 3. Regulatory environment and framework. Stock markets are regulated by SEBI, Securities and Exchange Board of India. So SEBI has many rules and regulations in place to protect the interest of investors. You can never be cheated by investing in stock markets. SEBI is a very powerful organization and performs in a very responsible way. Like for example, we, Abundant Stock Advisors, are a SEBI registered research analyst group licensed to provide stock recommendations. If this service is provided without the registration from SEBI, then it is deemed illegal. So SEBI has many kinds of rules and regulations which ensures that investor interest is safeguarded and you can safely invest in the stock markets. 4. Convenience. Stock markets are driven by technology. All trades are executed on electronic platform. Buying and selling is very easy and very transparent. You can place buying and selling orders on your phone, your computers, from anywhere around the globe with the help of Demat account. So with the help of Demat account, you can hold all your shares in an electronic format, collectively at one place. No paperwork whatsoever. And yes, you don't need any special education to invest in stocks. You just need enough knowledge and the skill to pick a stock. 5. Limited liability. So by buying a share, you become a partner, a shareholder in the company. You can vote and have your say on the selection of board members and other decisions that value to the company. Now, if the company and its share perform well, you make good profits. But for some reasons, if they don't perform well, if some kind of, let's say, a fraud happens, then you are not held responsible for it. You are not liable to pay for any losses which the company makes. Your risk is only limited to the amount that you have invested in the company's shares. That's it. 6. Diversification. You can spread your risk by investing in different companies and sectors like manufacturing, IT, pharma, oil, etc. That just helps in the right diversification. So for reasons, let's say IT sector doesn't perform well, then the manufacturing stock which is doing well will nullify the losses made by the IT sector. And history has proven time and again that when you diversify well, you sleep well and make good profits. 7. Easy liquidity. If you urgently need funds, you can sell your shares and get your money in like 2 to 4 days. You don't have to wait for like weeks, months or years. All the shares are traded on Bombay Stock Exchange and National Stock Exchange. The average daily volumes there are so high that you will rarely find it difficult to buy and sell shares. So finding a customer for your shares is rarely a problem. But make sure you invest in the right stocks. 8. Beat inflation. You will have to stay ahead of inflation all the time, or else gradually you would lose your buying power. Historically, stock market returns have always beaten inflation. And the reason is pretty simple. Shares grow as the economy grows, and inflation is related to economy. So if the economy grows at the rate of 6% and inflation is 5%, then stocks will grow at least by 10%. That means we would always stay one step ahead of inflation. No other investment would beat inflation so easily. 9. You can recover your losses. Yes. So had you invested in 2008 without any strategy, planning, guidance or knowledge, you would have incurred heavy losses, because 2008 was the start of a massive bear rally. You would have almost lost your entire capital. But exactly 3 years later, you would have got a chance to recover your entire losses. Yes. In the long term, share markets have the power and capacity to recover your losses. And the last, retirement planning. If you invest in fixed deposits for your retirement, there is a good chance that you would not even beat inflation. That means a lot of pain and losses after retirement. We saw right at the beginning of this video that if you invested in stock markets for longer periods, you will always get positive returns. So, to save for your retirement, you must invest in stocks. You can really retire rich if you start investing early. And like I said earlier as well, the only condition is invest in some quality stocks. Friends, not investing in stock markets would prove to be the biggest investment mistake of your life. Invest with the right knowledge and discipline. You will make a lot of money. All the best. Now some food for thought. If you're born poor, it's not your fault. But if you die poor, it's your fault. That's Bill Gates who's saying that. Friends, what a quote. Friends, earning wealth makes you an achiever. And then only an achiever has the right to talk about what next. You can then try to go beyond money and talk about philosophy. But the road to things beyond money goes via the money station. So first, make the money. Agreed, money can't buy happiness, but poverty can't buy anything. Money is the freedom, a cushion, a useful friend. People call it the root of all evil, but we call it the sum of all blessings. So get up, go. Remember, you are a warrior and not a survivor. It's your birthright to be wealthy. And yes, you must be knowing, right? It's easy to fall in love after you make money. So friends, if you are a serious investor in stock markets, do think about joining a YouTube channel. Channel joining is a new feature launched by YouTube recently. All these premium members who join our channel get a lot of exclusive benefits. To know more about these benefits, do watch our channel joining video, link of which can be found in the description below. There are some amazing technical videos on our channel. Do find time to watch them. They will add a lot of value in your life as an investor. It's a guarantee. Please like and share this video. If you have any questions, do let us know in the comments section. We will surely reply. And to get notifications on all our future videos, subscribe to our channel and press the bell icon. Thank you. Jai Hind.